Hi, everyone, and welcome back to our annual webinars of Fuel Arts, when we merge the two worlds together, the world of art tech startups and the world of Web3 and VC investors. My name is Denis Belkevich. I'm general partner at Fuel Arts, and with me, my co-host, project manager at Fuel Arts, Sonia Stubblebine. So let's move forward, but before that, let's remind you about our activities. So this week we continue to work on the two major projects Fuel Arts is working with now. So our upcoming Fuel Arts and Synthesis Accelerator 23 and also Fuel Arts Startup Report. So to begin with, I should admit that we have already created the short list of the startups enrolled into our Fuel Arts and Synthesis Acceleration, which starts in 2 weeks on the 3rd of February. So next week, we'll be happy to present you the lineup of our students and upcoming graduates. But today, we'd like to share with you some insights from the report, and in particular, which are connected with the ecosystem of Web3 investors. So as you can see, by analyzing the ecosystem, we found out there were 854 investors in art tech and NFT startups involved in deployment their funds in 2023. So overall, those 854 investors made 1,130 investments in this sector. Only one company, to be exact, Big Brain Holdings, took part in 10 investment rounds, while 699, almost 700 investors made just one investment during 2023. And here on this slide, you can see the spread between traditional investors, crypto investors, and individuals, which represent both traditional and crypto, like 70 to 30%. And the next slide, please. So in 2022, the whole year, so tech strategists, accelerators, and investment banks increased their interest and activity, especially in the last 6 months. But these are just some insights of the upcoming report that will be released in early March 2023. So stay tuned and don't miss our release. And today, to get more insights into Web3 investing, we have invited technology venture capitalist Julian Zegelman. Julian is a general counsel at Sfermion, an investment firm focused on the NFT ecosystem. Hi, Julian. Nice to meet you. Thanks for joining us.
Hi, thank you so much for having me.
Good. So let's start. As I said earlier, we're trying to mix, let's say 1 week we invite a startup, then the strategist, then the investor, because the mission of Fuel Arts remains the same. We make the world of art tech and NFT investments more reliable for the investors, and at the same time, let's say less scary for the entrepreneurs and startups. So we're here to speak about the new trends and the upcoming trends, which we can see on this market, especially during the turbulence. But my first question, I know you for 6 years, since 2016, almost 7 years. And when we met, you've been a very successful lawyer, and a crypto lawyer in particular. So my first question is, how did you shift your career from successful crypto lawyer to Web3 investor?
Thank you. Yes. Generally, what happened was I was practicing law with an emphasis on blockchain, and that's what I do. That's what I do today, essentially as well. Except that I do this now as part of Sfermion, which is a Web3 metaverse crypto gaming focused fund. And the majority of my responsibilities there are still legal related. although I'm also free to refer deal flow that fits the fund thesis to the fund. And prior to that, I was with a Step Ahead Capital, which is more traditional growth equity software, fintech and blockchain fund, but more traditional blockchain companies, less so metaverse or Web3.
Sounds great. And I was curious about Sferman. As I was reading, it's kind of one of the pioneers in this sector. It was like one of the first funds who actually decided to invest in like NFT specifically. And I was curious about the story of the company, who and how saw this opportunity and why Sferman was created.
Right. So there are two general partners, Andrew Steinwald and Dan Patterson. They've met a while ago. They've known each other for a while. They're both very early crypto adapters. So they got in pretty early in learned about blockchain and Bitcoin in particular. And then Andrew especially was always very interested in the various ways that blockchain technology can intersect with pop culture and media. And so he started out all the way back in 2017, learning some of the early NFT projects and communities. He still publishes a very, I think, a very insightful blog and newsletter called Zima Red. And so I think through his media involvement, Andrew became an angel investor in some early projects, built a thesis around it. And then Andrew and Dan raised a fund, which, I think is really one of the very first and few funds focused specifically on NFTs and metaverse. So that was the origin story. Basically, just a high conviction in blockchain, and then real interest and passion for this particular sector, which is NFTs and Web3 metaverse.
And how is it for you? Like, how did you decide to join Sfermion? I mean, you probably had a bunch of different opportunities. Why have you decided, to go for this one?
Right. So for me, it was very educational, even though I think, as Dennis mentioned, we met a while ago, and I've been involved in blockchain cryptocurrencies space since about 2015. To me, it was just really interesting to learn about this new application, this new wave, and just make sense out of it, and see what are the applications and how this is going to influence us in the years to come. So that's why I joined Sfermion, because I was genuinely interested and curious to learn more about, what are NFTs, what's real, what's hype, what's in store for the future.
Absolutely. Thank you.
Of course.
Yeah. Julian, you've mentioned the word mission, but I'd like you to elaborate more on that. So, as a general counsel of Sfermion, how would you define the company's mission and focus more precisely? Let's say, do you invest in NFTs as assets, or you invest in what leads behind, the infrastructural startups?
Right. So I think both. I think our mission is to accelerate the development of the metaverse. And so there's a few strategies. There's a strategy of essentially owning NFTs, investing in NFTs. There is a venture capital strategy of investing in the infrastructure and the various enabling technologies that surround that space. And just to get this off the records, just to cross this off, I think as a disclaimer, right, anything that I'm sharing here is really just more of my personal opinion, not necessarily representative of Sfermion as a firm. And second of all, like any of our discussions, I think are great to learn more about the space, but in no means their investment advice. And everybody should do their own research essentially, because I've been wrong quite a few times myself. So once we, checked that box off, we're happy to jump into anything you find interesting.
Cool. I should add that during our upcoming Philaricentas acceleration, we'll accelerate several very interesting startups who are now developing the tools which will help also Web3 funds to define, let's say, the future unicorns with more efficiency, and they will create the indices for NFTs and art NFTs in particular. So let's say in several months, you'll receive quite a few effective tools for that.
That's great. Yeah, no, look forward to checking those out. Definitely.
Julian, and I was also curious because I've been going through your website today of Sermon's website, and I'm going through the portfolio. And as I understood, the company invests in a bunch of different categories, art included. And could you tell us maybe about these cases? Because we're curious about the art segment that the company invested in.
Right. Yeah. So as one of the strategies is to actually own NFTs, that the investment team believes have a high likelihood of appreciation. And I think in this space in particular, scarcity and cultural value and uniqueness are important. And I think with art in general, right? I think it's not just NFTs. I think it's traditional art as well. People are typically drawn to something that's unique and represents a unique artist vision. They're drawn to something that's not mass market, but is rather unique, and there's scarcity to it. And essentially, I think the same is true. So in terms of art, I mean, again, I know that there's a few early NFT projects in the portfolio that became quite iconic. There's also projects in the portfolio that were created more recently, right, by current NFT artists, and that we all feel have a good potential of becoming cultural staples in the years to come. In general, the NFT sector is pretty interesting, right, because there's all different ways of creating. Some artists create digital art from scratch. Others taking existing works and turning them into NFTs. I mean, there's a lot of different approaches people are experimenting with them. And honestly, I think it's still early to tell which approach is more successful or right, but there's definitely a lot of experimentation. And there's some indication as well that there are collectors out there and there is a market and folks like owning NFTs. And even though the volume is lower this year, but there's still trading going on. So it's becoming a real asset.
Thank you.
Sure. And, when it comes to investment in NFTs as assets, they are quite frequently compared with, let's say, physical artworks. But at the same time, let's say, as we all know, the reliable investment is based on prognosis. Prognosis is based on data. Data is based on research. Research is based on time, and time is based on the, let's say, on the history. So the history of the physical art market encounts, let's say, 350 years, and the history of NFTs encounts 4.5 years. I mean, starting from the appearance of the legal term and then the development of the market. So, Julian, in your opinion, what is the NFT market required to become a more sustainable investment?
Right. So, well, I mean, I think interestingly enough, if you think about it, even the arts market, right, is an alternative asset class, which means that it's considered to be higher risk, potentially higher return, but definitely more volatile than some traditional asset classes like stocks and bonds. And as you said, the asset class has been around for, over like a few hundred years. I think with NFTs, it's definitely an alternative asset class as well. So it's almost like an alternative asset class within an alternative asset class, right? Because crypto assets themselves are pretty alternative in terms of their volatility, but also potential risk return profile. So high risk, high return. I think with crypto as a whole, it's been around for 14 years now. So we're seeing in the last few years, finally, more instruments for both retail and institutional investors, more historical data, some economic theories around what drives pricing, et cetera. So it's becoming a little bit more institutionalized, I think. So I think similar is true about NFTs, right? It's been around for a few years, 4.5, depends what you count as the first NFT project. And I think slowly there is more infrastructure, there is more trading, there is more liquidity, more folks are interested in it. Some funds are popping up similar to us at Fermion that decide to invest in NFT as part of their strategy. But I think all in all, for this to become more widespread, I think it's just natural course of time, right? As more people discover it, as more people start owning NFTs, and not even necessarily for investment purposes. I think a lot of people own art simply because they enjoy it, right? Because they can relate to the art piece, they can relate to the artist's vision. And then there's a secondary market where, things happen. People want to buy something else. They want to, sell their sculpture or sell their painting. I think the same natural process, if it happens in the NFT market, then I think this market will grow much larger and in some ways mirror the evolution of the traditional art market, perhaps.
Right. And
So
so
I
you
think
were
wider acceptance.
You were just saying about the adoption, and I was curious because as I understand what I heard, that people who are outside of the crypto circle and outside of this like NFT sector, they're often very skeptical, and investors included, because they see it as like too volatile, too risky, and they often do not understand what exactly stands behind, NFT and Web3. So how would you pitch NFT to like a traditional investor?
Well, I mean, I think I think it's all about education, right? And I think some people they have their opinions, and that's perfectly fine. There's always that Gartner curve of technology adoption. There's always some early adapters. There is some like people who get into it in the middle, and you're always going to have your non-believers. You're always going to have your late adapters. I mean, I think in general, when I'm asked, so what's an NFT? I mean, basically, the way I explain it, it's a digital representation, right, of either a physical good or a right, like a legal right, a contractual right, or an asset. And so I think, again, like I wouldn't necessarily try to convince someone that they got to go out there and invest all their money or any money in NFTs. But I would just do I'll try and do my best to explain to them what it is, and then also draw some analogies that if you think about it, the technology is new, but some NFT use cases have been with us for years, even decades. If you think about it, for example, in metaverse and crypto gaming, a lot of the digital loot that you get by playing the game is represented by NFTs. While we've had digital artifacts in computer games for probably like 30, maybe even like 40 years now. Well, I think like as a very widespread phenomenon and almost like an asset class in some cases, probably for the last like 25 years, right? But it existed, and now there's just a new technology for it. If you think about some other applications of NFTs, I mean, there's a lot of news right now, for example, about large companies coming out there and experimenting with loyalty programs built around NFTs, or the combination of a physical good like a pair of sneakers or a watch or a piece of clothing, and a digital representation that lives forever, right? Or lives for a very long time, even after the physical good is no longer usable. I mean, again, experimenting with various loyalty programs has been around for decades. I mean, you think about initially like some, coupon books, and then, it lives on your phone as some kind of, points, and now it may live on your phone as an NFT in your wallet. So.
Right. So basically kind of making the transition between like the traditional, like non-digital things, and then kind of making transition and comparison to like the Web3 ones, kind of making that more understandable for the general audience.
Right. Yeah, exactly. So I think there is a continuous line as well. I think some things are definitely new, but a lot of the applications of NFTs, I mean, you take an enabling technology and then there's use cases that existed and you improve them and you apply the technology to them. So yes, I think from that standpoint, it's probably going to be much easier to understand what NFTs are and maybe become less skeptical about them and their applications and their intrinsic worth than if you think that this is something that never existed before 2017 and then came together.
Right. Thank you, Julian. So I would propose to shift the angle of our discussion from assets, from digital assets to equities of Web3 companies. So for instance, 2022, and we also, have already estimated that number. So 2022 was the most successful year in history for in terms of cumulative investments in RTech and NFT startups. So the total amount invested in 124 NFT art and NFT startups equaled to 3.48 billion. So of course we had a decacorn. OpenSea, we have several unicorns, several tremendous investments. For instance, the biggest investment ever made during one investment round. Yuga Labs received 450 million. So this 3.48 billion, it of course contains, let's say, 10 companies with 11 companies with over 200 million of investment per round. But anyway, this is a tremendous amount. So and in spite of the bear market trend. So my question to you is, what are the main success factors for investors in Web3? What's your opinion as one of the investors?
Well, I think we need to define success factor. I think in my mind, when you're a venture investor, my opinion, again, it may not necessarily be everybody's opinion, but my opinion is, as a venture investor, your job is to, your primary job is to deliver returns to your limited partners, to your investors who entrusted their capital. And then, you also obviously want to develop the ecosystem as a whole and do some good by expanding that ecosystem. So I think it's an interesting job. It's an interesting business where oftentimes true measure of success is delayed, from your launch date or your investment date by good 5, 7, 10, sometimes 12 years. This is like an interesting case that I believe it was Union Square Ventures. I may be mistaken, but I think it was Union Square Ventures who announced like a few months ago that they finally distributed one of their funds. And by distributed, this means like all the assets were sold or liquidated, and they finally distributed the last of the proceeds to their LPs, and they officially closed the books on the fund. It was actually 12 years after raising the fund. And most of your VC funds are raised for 10 years, and then sometimes you have like a 1 or 2 year opportunity to extend it. So to me, success comes at the end of the road when you actually, look at either individual investment or you look at fund as a whole, right? Typically, and you ask yourself, okay, so was this a successful strategy? Was this a successful execution of the strategy? Was it a successful fund? And you do that by comparing your returns to your peers and the overall benchmark. And so I think from that standpoint, it's way too early to tell who was successful or who will be successful. I think just because, clearly there's some big success stories like OpenSea out there, which it's a very successful company, pretty active secondary market in the stock, even though it's a private company. So I'm sure some early investors may have made actual, fixed returns on their investment by selling on the secondary market. So of course, there are examples like that. But I think as a whole, if you look at the Web3 industry as a whole, I think it's just way too early to say who's successful and which investment is going to be successful, because it's just, too little time. There's not too many exits in the space, some, but not too many yet. very few IPOs in this space. It's just a very young space. So I think it'll take us at least a few more years, right? Like 3-5 more years to look back and say, okay, this was a great investment, or okay, like, we could have done better, like we learned something.
I should also ask you, I mean, not to mention the recent news that Microsoft reportedly closing in on a 10 billion investment into the most hot startup of nowadays, ChatGPT. So what do you think about it? I mean,
well, I think I like to think of myself as an optimistic skeptic. So on one hand, I love what the Open AI team has built. It's amazing. I mean, I've experimented myself with ChatGPT. Extremely robust engine. Love it. I also do things though. Then I put, so that's, as a user, and then just as a technology lover, I'm very happy to see what they built. In terms of the Microsoft deal, there's kind of like two general thoughts in my mind. One thought is anytime you have a large traditional closed source software company coming in and owning or becoming a significant investor in an open source project, it creates a lot of interesting questions about, like, well, is this going to continue to be a somewhat community driven open source project? Is it going to become like a very traditional closed code software product? And then of course questions come up with, is it going to be accessible to everybody, as some businesses and individual users going to be priced out? How do you price it, etc.? So there's all questions about that, right? And then the second set of questions, just looking at the valuation, it's a private company, so I'm not privy to their numbers. I saw in the media, like, which may or may not be true, that they may have like maybe like 10 million, maybe like a few dozen million of revenue coming in. And then if you think about their valuation, which I'm blanking out right now, but I want to say it was like 30 billion or something like that, maybe 25 billion. It's a very high valuation. And then the question is, well, are they going to be able to monetize it? Because at the end of the day, users going to have to need the tool so much that they're going to be willing to pay. And the question is how much. And then being a skeptic, I'm thinking about IBM Watson, right? So when IBM Watson first came out, there was this big huge anticipation that IBM Watson, which was very robust for its time, is going to change everything, right? We're 10 years into it. There's some industries where it's being applied. There's definitely a lot of positive change that it brought on. But I don't think that it lived up to all of the expectations. So with OpenAI, with ChatGPT, my question again is, well, commercially speaking, how is it going to work? What's the pricing like? And how long is it frankly going to take to live into its valuation, right? Like grow into its valuation, if you apply like traditional valuation multiples and traditional financial analysis.
Yeah, thank you for such a detailed reply. I should also say that OpenAI represents the first link of the our tech value chain, which is production.
Mm-hmm.
So production, then we have trade, management, and analytics, as Fuel Arts defines it. So the segment of production was also the most, let's say, desirable for investors in 2022. Because among the all segments of or sectors of our tech and NFT startups, in monetary terms, the production segment received 72.5% of all the cumulative investments into the sphere. So everyone is trying to create something new, and investors appreciate that more than, let's say, if someone wants to trade something or manage something.
Mm-hmm.
But also we notice a big increase of investments in the analytics startups. but that was in H2. I mean, in the recent 6 months. So now it's good. I mean, investors do care about what will be next. I mean, what numbers will be provided to receive trading signals. That means for us that they really believe into the future. Let's say in some years, when when those startups they had previously invested in, when they became mature and start releasing their indices.
Right. Yeah, no, I think you're right. You're correct that I think, first everybody is interested in the underlying underlying asset. So, creation, production of NFTs. How do you produce NFTs? How do you do it securely? How do you do it in a scalable way? How do you do it in a way that allows the creator the most flexibility? And then, as the ecosystem grows, you start looking at more and more infrastructure plays, enabling plays, tech-enabled services, et cetera, et cetera. Absolutely. I mean, we've seen this with traditional cryptocurrency as well, where, first we saw like the very first L1 protocol, Bitcoin, then we saw like a few other, level 1 protocols, and then around that started to grow infrastructure solution, analytics, trading, compliance, storage, et cetera. Right.
I was also curious of your personal opinion. Like, if you look at the NFT market, like this year, what do you think is actually missing, and what kind of opportunities are still there? Because when you read the news, it kind of gets the feeling that all the things already have been created and they have been so many things done. So what is your perspective? What is still missing in the space?
Besides AI and generative art, because
besides AI in general, I think a couple of things, right? Like my personal opinion. My opinion is let's start with a very basic one, which is wallets and means of storage. More and more people are getting onboarded, and I think more and more people are figuring out how MetaMask works, how other NFT friendly wallets work, but it's still not. I would categorize it as accessible to, let's say, mid and high level of like general sort of like technical savviness. But if somebody is not super technically savvy, just like regular user of the internet, has a mobile phone, knows how like web-based apps work, not necessarily super in tune with how like blockchain technologies work, etc. It's still pretty intimidating. I mean, I remember the first time I was just figuring out how cold wallets work, maybe like 6-7 years ago. Just figuring out how protocols work, etc. I mean, like it was very intimidating. So I think number one, whoever can ease and simplify the interaction between an average user and the wallet and the protocol definitely will have like better, bigger adoption. Now, I think apart from the technology, there's also going to be just like social adoption, right? Right now, I think there's a lot of mixed feelings about NFTs, and there's mixed feelings about crypto in general. I mean, definitely more penetration, but a lot of people are still very confused. They look at crypto in general as something that's either like a complete sham and going to disappear in a year, or it's like a quick way to get rich, or basically there's a lot of confused and I think non-productive ways that a lot of people still look at cryptocurrencies, and by extension at NFTs. And then within that, weird, strange, scary space, there is an even like weirder, newer, scarier space to some people, and that's NFTs. So I think like number one is easier consumer technology for storing and transacting. I think number two is just in a gradual time and more education and more balanced information about NFTs, which will help people figure out like if that's something they want to get involved with, but at least do so based on facts, not biases, not some media speculation, but facts. So that's number two. That by definition, I think is going to create should create a bigger community of holders and users, which is going to help with liquidity and liquidity always helps the growth of an asset class typically, right? Because it's it's easier to transact, more people get into it, less it's less scary to be in something that's liquid than something that you may buy and then you realize, well, I bought it, I like it, but if I don't want it in 6 months, there's no one to sell it to. In terms of opportunities and niches, I think there's still a lot of niches available. I would just look, like, a very basic analogy is the analogy with like Web 1.0, right? Like, you had the internet, and at first it was just bulletin boards and email, and that was it. And then, some folks said, well, why don't we apply it to hotel reservations? And some folks said, why don't we apply it to the financial services? And some people said, oh, why don't we start putting like our museum collection online so everybody can see it, right, on the entire world? So I think with NFTs very similar. Like, we saw some early sort of like generative digital art. Then we saw some early community-based NFTs with offline features. And now I think we're at a point where a lot of people in different areas like sports, pop culture, consumer loyalty programs, collectibles, etc., they're all looking at this as an enabling technology and asking themselves, well, can we derive benefit? Could our community members derive benefit from us digitizing and putting this into an NFT format? And I think that's what's really exciting.
Absolutely. And you mentioned right now already a couple of times during this conversation, like the educational aspects. Do you still think like it's weak and we're kind of missing like good quality information about like Web3 and NFT, or like what is the issue here?
I think it's just time. I think that there are some really good resources out there, but a lot of them are more niche and geared towards people deep in the industry. So it's like specialized. I think general media just talked about it like a few times when there were like some big newsworthy topics. And by extension, sometimes it's just about the hype. Sometimes it's about, some abuses that happened in the industry, less so about the actual technology or the various applications. So I think like with any new technology or new social phenomena, it'll just take time. And again, like I remember, now I think looking back, I remember when I first became exposed to cryptocurrencies back in 2015, it was still very, very niche. A lot of people just didn't get it, didn't hear about it. And there were a lot of people who would say something like, hey, have you heard about Bitcoin? And they would be like, bit what? Like, what is it? Like, what is it? I think now, fast forward to like 2023, people may not hold it, but it's like a household name. A lot of people in a lot of parts of the world will tell you, more or less accurately what Bitcoin is, right? So again, I think it's same with NFTs. It's just going to take time.
Thank you.
Of course.
We have a question from our audience. Nadia is curious about the first things that investor looks at when he faces with a startup.
Wow, that's actually a very tough question because there's so many important things. I'll talk about myself, right? Again, this doesn't necessarily represent like Fermian's approach or anybody else's approach. My approach, like I look at number one thing, I look at the team. So I like to understand where the team came from, what's their professional and personal backgrounds. I like the story of the team and how it fits into what they're trying to build, right? Because that's also very helpful to assess both their, true passion for what they're building and hopefully their, internal motivation for building it, and also just for objective chances of success. There's always outliers, right? Like Elon Musk knew nothing about rocket fuel and propulsion in space, and yet he became passionate about it and he built SpaceX. But if you take outliers aside, in some spaces it's quite difficult to build if you don't have pre-existing, technical or professional background. So yes, number one is just team. Like, how cohesive is it? What have those, what have the folks done in their past, and then also why they're building it. And I've, in my history in venture capital, spanning back to like, I guess 15 years now. It's actually the best companies are often created by people who are truly passionate about the product and the user and the community. And it may sound corny, but it's true. Less so about folks who just want to get rich. And sometimes the two and two come in hand. But oftentimes people whose sole motivation to jump into something is because, hey, this is a hot field and I'm going to make a lot of money here. Oftentimes those founders are the ones who get disappointed when things become a lot more difficult than they anticipated. And they're also oftentimes the founders who cut corners, and that leads typically to trouble, right? Trouble with users, trouble with regulators, trouble within the organization. So I think, yeah, number one, to answer Nadia's question, number one to me has always been the team.
Thank you. Thank you,
Of
Julian.
course. Yes.
So let's move to the two final questions of our today's webinar. Not to mention about the bear market trend, which is gonna be improved and changed to be, I mean, we all believe that, and we're looking at the how the market reacts to some market signals. But being in a bear market these days, still in a bear market, I believe our audience would be especially curious to hear what is your personal perspective on the future of the NFT market.
Right. Well, I mean, right. My personal opinion is that bear and bull markets come and go, and technologies that have real application and real benefit to society, they stay. And at some point, maybe they become kind of mainstream and somewhat boring, right? But they stay and they become like a big part of our day-to-day life. So from that standpoint, bear markets don't scare me. I think as long as you understand what, the dynamic, and you're careful, and if you're running a company, you're careful in how you plan on budget and how you run your company. If you're running a fund, you're careful about how you deploy your capital and your deployment schedule, and you really look to help your portfolio companies to get through that bear cycle. So bear cycle is fine. Again, I think the big test that's been presented right now is, what is there a utility to NFTs beyond just like this fashionable aspect that came together in 2021 and 2022, and all of a sudden it became fashionable to hold an NFT? Personally, I believe yes, and I believe that the application is pretty broad and wide into different categories, from digital identity to commercial rights to collectibles to loyalty programs to gaming NFTs that could be carried over from game to game, right? So like more of a unified gaming protocol that should be coming together to others. So I think the future is just experimentation in each of those areas and many others, perhaps, where NFTs could be of value. And then what's naturally going to fit is going to take off and grow. And some areas where, frankly, you don't need an NFT, just like with the internet, like you don't need the internet and everywhere, I think those are going to die off. So yeah, so that's my opinion, that we are past that hype cycle, at least the first hype cycle, which is exciting because people who are left in the industry now are builders, and they're building and they're experimenting, and we shall be seeing, in the next, few years what sticks, and that's exciting.
Thank you. Yeah, we're happy to support this point of view and share it.
Absolutely. Right. Absolutely.
Yeah, and in the end of each webinar, we ask for tips and recommendations. So I would like to ask you for recommendations for investors who want to invest in Web3 and NFT. What would you recommend? I mean, we're probably going to say number one is going to be research, I guess.
Right. Yeah. So this is not investment advice by any means, but what I would recommend is something that I've done myself anytime I came across an asset that I was curious about, but didn't know too much. So yes, so actually number one, before even research, number one, I would take a very balanced, a very cool look at my finances. And I would say that, okay, this is something new that's volatile that I don't know too much about. And what is like the amount of money that I can absolutely afford to lose, even if it goes to zero, I never see it, or it's illiquid for years to come, that I don't feel the pain, right? So it's an experiment, and you don't want to experiment with with your whole livelihood, or put all of your assets on the line. So that's kind of number one, right? And maybe the answer is, well, at this point in time, like I shouldn't be doing this because I don't really have money to lose. And maybe the answer is like, okay, I can take whatever percentage, right? Something hopefully less than 5% of my like monthly investable budget, and I'll put that into this, into NFTs, and then research, and then also, frankly, like what's your motivation? If your motivation is to invest with an expectation of return, that's research about like, okay, what is my thesis, or what thesis out there that I see other investors employ, I believe is correct and more likely to result in profit. There's also, frankly, a lot of people who are researching NFTs and buying them just because they love it, they enjoy it, right? And that's a great way to do it as well. I mean, some people have real life collections of art. Some people have digital. Some have both. So another way to look at it is, research. Don't spend money you can't afford to spend, but perhaps just buy things that resonate to you. And if you're lucky, they appreciate in value, and that's great. If they don't appreciate, you still own something that really resonates with you and you enjoy it. And that's a great way to do it as well. So not every decision is driven by money.
Absolutely. Thank you.
Good. But what about startups? Because you've Sonia asked you to name, let's say, several tips for Web3 investors, but for Web3 startups.
Well, for Web3 startups. Well, I think if I was running a Web3 startup today, I would do a couple of things. I mean, one thing, I would understand that the landscape, at least for the foreseeable year, maybe 2 years, has shifted. So that seeding stage where a lot of startups raised a lot of money simply by announcing that they're going into the Web3 space and demonstrating that they have the team, the expertise, and the idea, it is gone, right? So we're now on the stage where a lot of the initial bets have been made, and all of the existing companies, as well as some newcomers, they're going to be judged by their traction, their metrics, and their actual performance. So my number one advice, to myself, if I was running a Web3 startup, is be disciplined with, if you raised money, be disciplined with how you spend that money and make sure it goes a long way. Number two, if you haven't raised money and you're a newcomer to the space, be patient and realize it might take you a bit to raise the capital. And also, take a look at your product line and your roadmap and make sure that you can demonstrate some actual metrics, early on, right? So can you monetize? Can you show how you grow your community? Can you have actual measurable benchmarks and metrics that are probably even more important in a bear market like this? I mean, they're always important because at the end of the day, you're judged. Your success doesn't depend on how much money you raise or what your paper valuation is, right? Your success depends on, did you build a sustainable business? Does that business generate revenue and hopefully profit? And then can you exit it? And can you exit it at a valuation that makes sense to you and to your shareholders? So I think if I was to sum it up, my advice to Web3 founders is business as usual with an emphasis on business. So it's great when, the wind is blowing in your direction and you're riding this huge wave. That's great. But sometimes you got to swim against the wave. And that's what's happening right now. A lot of startups have to be swimming against the current. And you got to be very strategic and conserve your energy and make sure it lasts you all the way, right? So you can actually get out of the water. So I think that's what's happening in Web3 today.
Perfect. Thank you so much, Julian.
Thank you. Thank you for having me. This was great. Really
Yeah,
enjoyed
and thank you. I mean, you're living in
Los Angeles.
in LA now.
Yeah,
Yeah.
in LA,
So thanks
that's
for
right.
getting up early to
No worries. Yeah, no, it was well worth it.
to join us. Good. Thank you. That was a tremendous discussion. I personally received one very important tip from you.
Cool.
To be precisely, when you said that the NFT market could, or better say, should be estimated as part of the crypto market, so it doesn't have only 4-year history, it has a 12 or 14-year history. So it sounds not only reliable, but it sounds reasonable. So at Fuel Arts, we'll continue researching in that direction, not only to
Great.
impress investors, but also to discover more opportunities to estimate the NFTs as part of the crypto world. So that's my personal gratitude for you for this tip.
Absolutely. Thank you so much for
Great.
today.
Thank you so much. Have a great rest of the day.
Thank
Thank
you.
you.
Thank you.
Thanks.
And yes, see you next
Take
week
care.
with
Bye-bye.
another tremendous guest, which we'll announce in several days. Yeah, but we've been waiting for that guest for nearly a year, and now he finally agreed to join us.
Absolutely. Join us next week and we talk soon. Bye.